Welcome to another RES Wave update. Okay, so in this video, I'm going to talk about the Nasdaq. Now, if anything is more directly related to cryptos, then it's going to be the Nasdaq, right? Now, that's for obvious reasons. Cryptos are a technology. The Nasdaq is an index based on technology stocks. So, this is my latest interpretation of the Nasdaq. So, I've spent a while not looking at this chart. So then when I came back to look at it, it'd make more sense. And that's exactly what's happened. So it's a very timely video in the series. So one thing I want to point out here is that wave one ended at this point here in 98, July 98. And it was actually a B wave, an expanded B wave that took it to the highs that it saw. So obviously that was basically it was a big bubble, right? So that's why the following move down was a C wave, right? Now this is something that is happening in a lot of stocks at the moment, or cryptos. This is a very similar pattern to what we're seeing, for example, in XRP, something similar to this, where we saw the B wave expand like this in 2017. We saw the C wave down. D is happening now, and then we're going to see an E wave. So not all patterns turn out the same, but they do rhyme because patterns do repeat. Okay, that's what RES wave is all about. So basically, once we had this wave 2 end here, we had wave 1. So this is an overall wave 3 happening here. If you look at the previous idea on the Dow Jones, you'll understand the context. So basically, we've got the next wave 1, which ended up here in 2018, followed by an A, B, C, and now we're currently in D wave. Okay, so where do I think this is going to fall back down toward? Well, that's going to be the previous 4th wave. Okay, so that's where generally markets tend to retrace back to. And so basically, like, this is also a retest of the .com bubble highs, basically, and resistance becomes support. So why is this going to fall so far? Well, because it's been pumped so high. Okay, the bigger they are, the harder they fall. This is just the way it works when it comes to corrections. Okay, so if you want to know how far that's going to fall, well, I'd be tipping the top around 17,000. So about over 70% drop there is what I'm expecting. So if we just zoom into the daily chart, you can see that it's quite a long way down, but it's the previous 4th wave. Okay, so this correction did expand to the upside. We saw wave C was relatively small. However, wave E won't be so forgiving. That's my opinion, and I'm sticking to it. Okay, so if we go down to the 4-hour chart, I will turn on the waves, switch on the labels so you can see my interpretation of this type 2 expanded zigzag. Okay. Okay, so that's basically it right there. Now, I did adjust this count from previous. So to me, this is much more a more realistic view. So basically, wave 1 went from here to about here. And you can see 1, 2, 3, 4, 5. So that's about that length. So to basically get a similar length from the end of wave B would take this market to about 17,000. Okay, so that's my upside target there. And I do believe we are in wave 3, so we should see a move to the upside from here. As you know, when we break highs, we get a little bit of a pullback. However, this is quite normal. We're going to see wave 3 and then 4 and 5 until we hit that 17,000 mark, roughly. So just to go over these waves, after we saw wave A, in brackets, we saw a small wave A down zigzag. You can see right there's a small zigzag. And then a B, C, D was expanded. E, okay, the D was expanded because, the whole thing's expanded. So why wouldn't D expand? Every possible wave that can go to the upside has been expanded, and every wave that could go to the downside has been minimized due to the strong uptrend. However, this is a corrective pattern, as you can see. Wave 3 would never be this choppy in the middle. In fact, it would be sharper. If this was a wave 3, you would have seen something go a lot higher, a lot quicker from this area. But this is not a wave 3. So basically that's going to cover that. So hopefully you found this video interesting and informative. Thank you for watching.